Bernard, what's been the big story for global equity so far in 2025? And then we'll talk about the second half of the year.
So I would say two important things. The first is volatility introduced by tariff risk. The market was recalibrating between the first and the second quarter. You had a low beta rally in the first quarter. People were highly uncertain. And then you had this idea that, hey, maybe we've seen tariff peak. And then you had a rally in global growth or growth stocks in the second quarter. But that created a lot of volatility, uncertainty in the market. And then the second thing I would say is diversification finally paid off. It wasn't just a small group of stocks that performed well. You had a broadening out of US equities. And in addition to that, you had non-US equities started to outperform. So I think those two were the main highlights for the first half of this year.
Can you talk a little bit more about the rally in European stocks, for example, and emerging market stocks? Because that really did take a lot of market watchers by surprise.
Yeah, it did. So I think a lot of investors have started to look for ways to diversify out of US equities, out of the fear of tariff risk, out of the idea that US equities might be looking a little pricey. And we think there are several reasons why this rally might be sustainable. The first is obviously valuation. The differentials between US and non-US stocks have widened. Second, you've got the dollar weakening. Dollar strength, dollar weakness usually goes in stretches. And we're in a period of dollar strength. That's probably going to be followed by some sort of dollar weakening in the next few years. And then you have this idea that fiscal stimulus remains supportive of growth outside of the US. Like the Germans, for example, had this big, massive fiscal bazooka that's going to be supportive of defense and infrastructure spending for the next 10 years. And then finally, there's really no shortage of good ideas outside of the US. So those are all very supportive of non-US equity investing going forward.
All right, well, we've had a tremendous rally since Liberation Day, if you will. So let's spin it forward a little bit. What will be the catalyst to take stocks higher from here? We have the S&P continually hitting new highs.
So no question for us, we're bottom-up managers. We always look at company fundamentals. Fundamentals, earnings from an earnings perspective, continue to be very supportive. You know, we're at the start of earnings season, so a little too early to say how this is going to fare out. But I think there's a lot of evidence that suggests that companies are still delivering on earnings growth. Their guidance might be a little mixed, and that's understandable given all this uncertainty driven by tariff risk. But at the end of the day, it's going to be earnings driven, and there's definitely areas in the market where earnings, we believe, are going to be highly sustainable.
And where are those areas? Where are the opportunities in the market that you see offer the greatest growth potential?
So at American Century, we focus on this idea that companies that are showing signs of improvement, where fundamentals are getting better and where those fundamentals are sustainable, those are the best investments. And areas like AI spending continue to be very attractive. It's not just CapEx on the picks and shovels side of the business. It's now how do you monetize AI and software? How do you monetize AI features? Those are going to be super interesting. And then areas where we haven't really seen growth up until recently, where we're just starting to see improvement, areas like electricity generation, areas like Japanese digitization and modernization. Those provide a lot of opportunities, at least for our portfolios.
And then finally, we spoke about US versus non-US stocks. And then I mentioned the S&P, but it's really been the Mag 7 and 493 other stocks. Can you talk about the dichotomy there? What are we going to see in the second half when it comes to the Mag 7 and then the rest of the market, or are they going to move as one?
So I think we're starting to see differentiation now across the Mag 7s. You might be talking about Mag 7s going forward, and you're starting to see investors rewarding growth and maybe not rewarding those companies like the Apples of the world or Tesla of the world where growth might be challenged. And that we think is going to be, that is a very healthy sign, right? The market's starting to differentiate across those strategies. And that's how we think about the Mag 7. We don't think about them as a group of stock. We think about them as individual business, and we need to be very, very selective when it comes to that group.
All right, well, thanks a lot for coming on and talking about it.
Thank you, Greg.